So the first one we're going to talk about today is Woolworths. Okay, we all understand, I'm sure, that Woolworths here in South Africa is a combination of a food and clothing retailer. We're not going to talk about the organic food and the fabulous sourcing and the responsible supply and the high margins and the fabulous cold chain, because that is all taken as read. When it comes to clothing here in South Africa, we are talking about Woolies, and Woolies has an associated bunch of brands like Trenery and Country Road. But perhaps even more important now is that Woolies has very, very significant clothing assets in Australia. The market capitalization of Woolworths is just short of 100 billion rand. It's the largest of the stocks we're talking about today, 96.6, I'm told. Price to earnings ratio relatively high, but I'll explain in a minute why that is. It's 28.55, dividend yield 2.37. What they did in recent times was to expand the clothing activity, and the purchase of David Jones in Australia is a pretty chunky and important one, leaving Woolworths now in a situation where more than 50% of the earnings come from Australia. I don't know how Australia did it, because they are also a commodities exporter, and all of the iron ore and the coal prices are looking horrible for them too. But remember, Australia is a rich country. It's part of the developed world. It has a high GDP per capita, and it has a very well-developed economy which is broadly spread. So it is in fact looking quite good. Woolies' share price, as you can see there, has been at 100 rands a share a couple of times in recent months, and it is above that mark again today. You can see we like this one. You can see why you would like this one. Ian Moyer, the CEO, doing a fabulous job. People in general now believe it was a good move to buy David Jones. There were a lot of skeptics at the time. The company had to raise quite a lot of capital from its shareholders by way of a rights issue in order to finance that transaction, which it did successfully, just below 60 rands a share. And it took on quite a lot of debt, which again is quite a favorable time. As we know, in corporate global credit markets, there's a lot of cash available at a relatively modest yield. So the PE is high because the business is now bigger than it was a year ago. Some of the business combinations, the addition of David Jones, is still working its way through in the numbers. One additional point to note about David Jones is that it has some fabulous property assets. I've not been to Australia myself, but I've told that Sydney is amongst the most attractive cities in the world. Melbourne, of course, is fantastic. Brisbane is wonderful. Perth is even better. In these city centres, David Jones has some big old department store type buildings which are worth a hell of a lot more than they are reflected on in the balance sheet of Woolies. And it is Ian Moyer's stated intention that they're going to jazz those up, look at working them, looking at the assets in a new and creative way, maybe even offloading some of them. And the stores themselves, the David Jones stores, instead of just buying other brands in and allocating space to these global brands, is going to carry more of the in-store brands. They're going to do the purchasing and procurement themselves. Better margins. Excellent. So we own this one in the hot stocks portfolio. It's absolutely self-evident that this is a hot stock. Clearly, we love it for the food, we love it for the clothing. Fabulous management team, excellently positioned, a clear and outright hot in our hot stocks portfolio perspective. Right.